They don't want you in gold and silver because what that means is that you become sovereign and independent. You become your own bank when you have physical gold and silver. But if you get rid of it and you put the proceeds back in the bank, you become beholden to these criminals, really. Monday, December 29th, 2025, Monaco 64, home of alternative economics and contrarian views. Not surprisingly, the market action in the futures market in silver and gold has been very volatile from late Sunday to this morning. As I speak here, it's 8:02 a.m. London time. And in my live stream yesterday with Rafi Farber and Phil Lowe, some of the viewers asked where we thought silver was going to open, what it was going to do. And I said, well, it could go up to 90 and come back down to 70. It could be very volatile. And it has been. But my message for you today, and I even have a playlist about this, the message is hold on to your gold and silver for dear life. And I'm going to put the playlist here for you. I've been telling people about that for years on this channel, talking about the years. Yes, this past November was the 10th anniversary of the channel, and I'd like to thank you again for your support because yeah, this channel wouldn't be here if it wasn't for you and your support of the channel, so I thank you a lot for that. And we're going to go over what's going on in a minute, but after that, I'm going to talk a little bit about what gold and silver should really mean for you, at least what it means for me. As I always say, this is not financial advice here. But anyway, yeah, the futures market opens around 11 p.m. London time. So I was ready in bed. I checked it. When it opened, it went straight up to like 81, 82, and then eventually it went up to a high of 84.28. That's the spot price. I've heard though that Shanghai, the physical market, it's a truly physical market over there, Shanghai Gold Exchange. They also trade silver. Price got up to 86. I'm hearing that the over-the-counter market in Asia, Singapore, is trading, well, apparently there's very little offer there. The market is almost like people don't want to sell. I'm hearing that from Just Dario. He's got contacts over there. So as we speak here, though, silver is now down $3.46. Yes, it settled at $79.33 on Friday, but don't forget, it went up 10%. So this volatility is going to get even more accentuated the higher gold and silver go. And that's why I've been warning people, unless you leverage and you're a trader, short-term trader, you should hold on to your physical gold and silver for dear life. That could be literally, or of course, if you've got a big stash, you should have it in safe storage with a reputable company, not a bank, of course. And we're going to come to the matter of the bank in a minute. So yes, hold on to your gold and silver for dear life. And sometimes it is scary and frustrating when you see these big moves. You kind of question, am I right in doing this? And you get a lot of naysayers, especially if you spend a lot of time on social media, places like X, where there are people who hate gold and silver, and are trying to call tops or trying to say it's a bubble, right? Ignore those. Rafi Farber yesterday said one thing. He's tried to, in the last few weeks, to just ignore everything, just check the prices 2 or 3 times a day. Yeah, because it doesn't help. All it does is make you more anxious. But I keep an eye on it because I need to see what's going on to hopefully help you, give you some updates. But one thing over the years, because back when I started stacking gold and silver in '02 and '03 respectively, the bullion banks were still firmly in control. There's no such thing as Shanghai Gold Exchange or Futures Exchange. Dubai was not as big as it is now. So COMEX and LBMA controlled everything. And I've spoken, of course, about that WikiLeaks document they published from 1974, where the U.S. officials from Treasury and State Department were in contact with bullion dealers in London prior to gold being made legal again January 1st, 1975. And one thing they said is they expected a substantial futures market to evolve that would dwarf the physical market and that would create a lot of volatility. And the reason they wanted that to happen was to keep you, the public, away from buying physical gold and silver for that matter. Silver had already been trading as a future. So what I'm trying to say here, they don't want you in gold and silver, because what that means is that you become sovereign and independent. You become your own bank when you have physical gold and silver. But if you get rid of it and you put the proceeds back in the bank, you become beholden to these criminals, really, because unfortunately, present day banking system is criminal. Why do I say that? Well, because they are able to create currency and credit out of thin air. They don't have to have reserves. Yes, some of the loans might be backed by assets, but it's your asset they back it with. Ever since 2020, the Federal Reserve has required the big banks to have that they can have zero reserves. So I think it's totally fraudulent. And yes, they want you to stay in the game so they can keep inflating and inflating the system, indebting you, indebting other people, so they can suck the wealth out of the public. And that's why I think it's so important to have physical gold and silver. And in terms of how to go about it, the first thing is you need to live within your means. You need to have a household budget so you know how much you've got coming in terms of income from whatever you do, and how much you have going out, and making sure that the income is bigger than the outgoing so you can save. Yeah, save in fiat, of course. That's the only way we can do it right now. But regularly, if you have enough fiat where you can leave a little bit of a reserve for emergency, but you've got a little extra, then you can start thinking about buying gold and silver. And the thing about buying gold and silver, it's not about greed. You don't want to buy gold or silver here, let's say at 80, so you can make a profit and sell it at 90. You shouldn't think like that. You should think of it as saving. You're trying to get out of the system, and that's what you do. And if you can do that regularly, yes, that becomes dollar cost averaging. If you can't do it regularly, do it whenever you can. But don't get enticed or pushed around just because gold and silver are making new highs. I have to buy it, because that's what shakes you off. And the powers that be know that, and that's why they do these pumps and dumps. And this is what we're seeing right now. I would say the best thing for you to do right now is to look at the very long-term charts of gold and silver. You can go to tradingview.com, put up a monthly bar chart, and just look at that, and logarithmic as well. It's more smoother, and you see that the trend is like this. And if you flip it around, the trend for fiat currencies, of course, is down, and it's going to continue. Why is it going to continue? Well, Philip Lowe and Rafi Farbro on my live stream last night asked, we were asked by a few of the viewers, what's the Fed going to do? And they said, well, they're going to print. They've got no choice. We've got this fiat currency debt-based system. If they allow things to liquidate and unwind, it will be the end of them. So they have no choice. They're cornered. This is expected. It's going to get more and more volatile. And gold as well. For example, I just saw about an hour ago or so before I went out with Rudy for his walk, they smacked gold down to like 44, 45. Gold was down like almost $100. Why? Well, because I think they're getting desperate about silver. So if they can't push silver further down, they go with gold. That's how these people operate. But all they're doing is throwing more paper at the market. The more paper you throw, the more currency out of thin air. It means the Fed is creating the system. The more bullish it's going to be for gold and silver. Because the problem with the Western precious metals market, and by Western I mean COMEX and LBMA, is that it's a paper market, and they've written out too many paper promises, and now the rest of the world wants physical silver. You know that China is going to put export controls from the 1st of January. We know that the Middle Eastern central banks, the Indians, the Russians, they're all buying physical silver. And even the US has made silver a critical mineral. So paper won't do anymore. You can't use paper to build solid state batteries. You need the real thing. And they kept silver so undervalued for so long that the supply isn't there outside. And even the recycling is really hard because it's still not economical to recycle tiny pieces of silver in millions of, let's say, mobile phones and electrical goods that have, you've put in your drawer. It's not worth it. So a lot of this silver has been lost, and it takes years to develop mining, silver mining. And that's the other thing I wanted to talk about. That's more speculative, and I have exposure to silver miners, and that's going to be very volatile. But as long as you don't leverage yourself, as long as you don't borrow money to do any of this, and you invest, let's say, in the miners, money that you're able to not be so worried about, you will sleep well at night. I mean, last night I stayed up just to see where the market opened. I wasn't going to stay up all night just to look at the price. So that's how it's got to be. While the other thing that's going out there, and these are just rumors, is that some big bank has been in trouble, a systematically important bank. Those are the too big to fail banks. Banks like JP Morgan, or Bank of America, HSBC, Barclays. I'm not saying it's any of those, but apparently the exchange had to liquidate this bank's silver position because they couldn't cover the margin. But this is just speculation out there. There's a lot of that going on. If this actually did happen, we will soon find out. We need to wait until the US market opens, because they're saying here that this happened in the early hours Eastern time. One is saying here 2:47 a.m. Eastern time, but that that was just recently, and this post is from 9 hours ago. But maybe this was from Friday to Saturday. Who knows? But it says the reports are concealing the name of the bank, but it is confirmed that overnight the Federal Reserve was forced to pump another $34 billion into the banking system through its emergency overnight repo facility. This $34 billion is on top of $17 billion, which had to be bumped in 2 days ago on Friday morning. The bank involved is described as one of the largest players in the precious metals derivatives market, blew past every risk limit, breached every covenant, and exhausted every line of credit. So, yeah, we'll have to wait and see if there's any truth to this rumor. But I wouldn't be surprised. I'm not going to speculate which bank it might be. I think it's better not to mention the banks, even though I'm not a fan of these banks. Yes, I suspect we're going to continue to see a lot of volatility in these markets. And with that, I'm going to wish you all a very good day. Take care. Bye.